How's it going, guys? Daniel Char here, Metal Mortgage. Today, what I want to do is talk about the whole buy a property with no money down real estate, no money down real estate investing, no money down flipping. Is this possible? Does it work? Should you do it? Let's get right into it. So first things first, can you buy a property with no money down? Answer is absolutely, you can. Now, that is just one part of the equation. Does it exist? Yes. Can you do it? Yes. Now, the next question, which is the more important question, is how do you do it and should you do it? Is this the right way, the proper way to invest? And the reason why I say this is because one of the number one selling features for real estate courses or real estate events, real estate clubs, is showing and selling the idea that you can buy real estate with none of your own money. Okay? And the reason why this is such a great pitch is because most of the population has a problem with qualifying for financing when they want to buy real estate. And do you know what that number one issue is for most people? The biggest issue most people have is the down payment, saving the down payment. A lot of Canadians may have good credit. They pay their credit cards on time, they pay the car payment on time, and they make a good, healthy wage. They might make six figures. Husband and wife both make 100 grand each, so really healthy income. But what they are missing is the actual down payment to put onto a property and source that down payment. And the reason why they have a problem with sourcing the down payment, and let me know if this is one of your issues too, is because we're in a very high tax country. So if somebody's making $100,000, you're not walking away with $100,000 at the end of your year. You still got to factor in your CPP, your EI, and then your taxes on your tax bracket. And then on top of that, you still have living expenses to make ends meet. You still got to eat, right? And chances are you're either living at home with family, so you might contribute to your monthly expenses or not, but you still have to eat. Or you might be like many Canadians who are renting and they're looking to buy their first home, or they want to invest in real estate. So this is where a lot of Canadians go into these real estate clubs, or they go into these real estate seminars on how do you buy a property with no money down, only to be pitched a course for thousands, if not tens of thousands of dollars to learn how to do this trick. So what I want to do is just crush the myth and go through what exactly is no money down financing or no money down real estate purchasing. In a nutshell, how do you buy a property no money down? It means that you are still funding a down payment, but you're not sourcing the down payment from your own self. You didn't physically save the down payment. You didn't go to work every month, save your payroll, pay off all your expenses, and hold on to that savings over a long period of time until you save up, let's call it $200,000, 20% of $1 million property. You didn't save up for 2, 3, 4, 5 years, okay? So in a nutshell, what they're doing is saying that you can borrow the down payment. You can leverage the down payment, okay? So can you do this? Is this a strategy that you can do? Absolutely, 100%. You can buy a property with none of your own money in there. But I want to make context. When we talk about no money down, it doesn't mean no money at all. It just means no money from your own pocket. So that means that you can leverage through your line of credit, through your credit cards if you want to. You could leverage through other people's money through private financing. You could leverage through, let's call it a gift. A gift. Gift is not leverage. A family member is literally writing a check for you and saying, this is your money now. mom and dad is going to help out their kids and they don't owe mom and dad back money. Okay. So mom and dad is going to write a check for $200,000. Now the kids have a down payment. Then they're going to get a mortgage from the bank for $800,000. Boom. They literally bought a property with no money down. Even though mom and dad helped them out, through the purchaser's eyes, through the lender's eyes, through the investor's eyes, that is technically a no money down deal. Okay. Now, where things get really shaky and muddy is when you're trying to do it for investing purposes. Because what happens is when you're buying a property to live in, you're technically going to get a bank mortgage, and that's going to be amortized over 30 years. You're going to pay principal and interest, and you're going to pay down that loan. However, when we talk about no money down financing for flipping properties or doing the BRRRR strategy where you buy a property, you renovate it, you rent it out, and then you refinance it, and then you rinse and repeat, you do it again and again. That's called the BRRRR. Typically, this is all using private money. This is using investor funds. They are finding money through a list of investors that are looking for a return on investment, and they're risking their money for the down payment. They're going to borrow the down payment. They're going to borrow the mortgage to purchase, and they're also going to borrow the renovation money. And then at the same time, they're going to hope that after all the renovations, they're going to boost up the property value, and there's going to be enough spread there. That technical term is called lift. Bringing a property, let's call it from $500,000 to $1 million. That's a $500,000 lift. Now, that sounds great in theory, right? That's a real estate investor's perfect dream. The problem we have in this community is that nobody factors in the total cost of borrowing, the financing structure, the exit strategy, and also the holding costs. And this is where I want to stress that you got to be careful. You got to be very careful, because I've seen a lot of deals go sideways. And I've seen deals that came out of these structures, but they barely came out. So what do I mean by this? Before you even buy a property, especially doing these no money down deals, before you even get into these deals, you got to know how to get out of these deals. So that means that you have to know exactly what your cost structure is going to be when you buy the property. You got to know exactly how much your renovation cost is going to be. You got to know exactly how much your holding cost is going to be, because as you're renovating, you're not making rental income, but you're still paying financing, and you're spending money out. Money's exhausting from your pool of funds, right? So you got to forecast your timeline. You got to also forecast how long it will take for you to sell this property and close. And when I say sell the property and close, those are two different things. Because you can sell a property in January, but it doesn't close until April. So that's still a 4-month gap. So you could have sold the property in January, but you still got to carry that mortgage, that financing, all the mortgages, all the money that you raise for 4 months until you close. And the reason why I say be careful, guys, if you're going to do this, is because I see a lot of people overestimating their ROI on the project. They're underestimating their financing structures. They're underestimating their holding costs. They're underestimating their renovation timeline and their renovation cost structures. We're seeing a lot of cost overruns with renos. Another thing that they don't factor in is how much time it will sit in the market as well. So even though you believe that you brought a property from $500,000 to $1 million, you believe that property is worth $1 million, but maybe the market doesn't believe it, because it's only worth $1 million if somebody pays you $1 million, right? So nothing really happens until the pen is on the paper and the money's transferred. And this is very important because I see a lot of investors start looking at deals, starting putting offers on deals, but they haven't done all the proper calculations. And if they did do the calculations, they didn't do the calculations correctly. They were over ambitious on their funds coming, their profitability, and they're getting stretched way too thin. Now, another big problem that I'm seeing is when people try to do the no money down financing, they think that they're going to go straight into a regular bank. They think that they're going to do a no money down deal by raising capital through Facebook, their friends and their family, or through other experienced investors. And they're going to take this borrowed down payment and they're going to get a bank mortgage. Can you do that? Technically, you could do that. Is it likely? Highly unlikely. Why is this very unlikely? When you're trying to get a regular bank mortgage, the banks are going to ask you for your down payment, and they're going to ask you for the source of your down payment. So now, if your down payment is coming through a gift from a family member, like let's say mom and dad or your uncle, then no money has to be paid out. Okay, so they're gonna have to sign something called a gift letter stating that this money is given to you and you don't have to pay it back, no matter what happens. Okay, there could be a breakdown in relationship. You could lose your job, you can't pay the mortgage, like everything could go sideways. You sign a document that you don't have to pay this money back. That's a gift. However, a lot of real estate investors are trying to do the raising money method where they're actually borrowing private money at 10%, 12% interest plus fees and hoping to get a regular bank traditional mortgage. Not going to work. Why is it not going to work? Number one, anytime there's leverage funds, the banks will want to see where the funds are coming from. Number two, if you're paying an interest for the funds, let's call it a line of credit or credit card, your income needs to be able to support that, okay? So not only are you trying to qualify for the mortgage, you still have to qualify with your income for the down payment that you borrowed, okay? And this is where things fall apart. Another big reason why these deals fall apart when investors think that they're trying to go into a regular bank is because they're buying beat up houses that are not livable. These houses are not in livable condition. And that's why they're buying these houses really cheap. Because if they renovate the house, they can bring the value up to $1 million. And the only reason why they're buying these properties or able to buy these properties at $400,000 or $500,000 is because these properties need a lot of work. There's the kitchen's probably busted up, the washroom's busted. You need new walls, new tiles, new roof. So it's not in livable condition. So even if they have the income to qualify for the mortgage and the down payment, the bank is still not going to finance that deal because they don't like the property condition. So that forces these investors that already signed a contract and they're firm on these deals to go through private funding, okay? They didn't expect to go private funding. They expected that they're gonna raise money and walk into a bank and get a 4% mortgage, and principal and interest mortgage amortized over 30 years. That's what they expected. But now, because the deal is firmed up and they don't wanna get sued and they already have a deposit on, guess what? Reality kicks in, and now they need a private mortgage to lend them on the actual purchase, and the down payment is coming from the raised funds, and now they also have to raise more money for the renovations and the holding costs, and this is a ticking time bomb. Now here's the thing, can this work? Absolutely, this strategy can 100% work, but it really depends on, number one, your experience and also the market. Now, why do I say market? Because I feel, this is my own opinion, guys, I feel like the market means more if you're trying to do this strategy sometimes means more than experience. And here's what I mean by this. You could be the most experienced investor. You flipped 100 properties in your lifetime and they were all successful. But in a bad market, you could be super experienced and the market could crush you. For example, we've all experienced the interest rates going up steeply over the last 2-3 years, right? Imagine you borrowed private money on a first, second, third, or even with a fourth mortgage, hoping to double a property value and exit with a healthy check, like 100 grand, 200 grand in your pocket. That's what you expected. Only for interest rates to double and the market to halt. You're in a bad season, you're in a bad market, no buyers are coming in, and now you're holding a property. It might have been fully renovated. You got a beautiful property sitting there on the market. It's on MLS for 90 days. You haven't even got a buyer yet. Now it hits 120 days. Now you actually get a buyer, but they want a 90-day close. You just expanded your holding cost from, theoretically, let's say you planned a 6 months flip, you expanded it to almost a year or more. And that kills your profitability, okay? And actually puts you in risk because you put no money down, your investors are on the hook, all right? So now you wiped out your whole profitability and now you're on the hook because now you got to save face because if you don't make your investors whole, you're going to get sued from your investors. So now you're in panic mode and you're doing all of this now for nothing. You're taking on so much risk for nothing. So this is why sometimes I say a really good market is actually more better than experience because you could be a first-time investor. You're doing it for your first time. But think about the market in 2015, 2016, 2017. The market was going bonkers. Like you couldn't make a mistake, right? So imagine, during COVID, everybody thought the market was gonna tank, but instead the opposite happened. The market went up, it just exploded, right? So imagine you're a very novice investor and you say, you know what, I'm gonna try this out. I'm gonna borrow all this money and try this out. In 2017, you would have been okay. You have no experience doing this, but the market actually carried you and you would have looked like a hero. In 2020, you did this, you're gonna look like a hero. Lots of properties were going up $200,000, $300,000, $400,000 with minimal renos, right? So just as a recap, guys, can you buy a property with no money down? Answer is yes. Should you do it? Depending on your experience and the market, depending who you have on your team. Should you be going very aggressive on these? I don't think so. And can you get bank financing if you're trying to do large scale flips? The answer is no. So prepare for that. Prepare that you're always going to be in the private side and you're going to have to flip back into the A channel, okay? And I also want to talk about one more expectation. A lot of times I will get phone calls from very experienced flippers, but they don't have traditional jobs. Their only income is through flipping properties. Yeah, that's it. They're just flipping properties. So they don't have a traditional income, like a T Ford income, okay? But their expectation is they're gonna take a property, double its value, and then they're gonna refinance it to a bank. Not gonna happen, okay? Not gonna happen. Because the banks are gonna look at your income, your credit, your down payment, okay? And if you don't have the income required through the bank's guidelines, they're still not going to lend to you, even though the house is beautiful, even though your credit is perfect, immaculate. If you don't have the income to support the loan, the bank is still gonna say no to you, okay? So if you're planning on doing these no money down deals, understand your exit strategy properly. Understand, can I actually get bank financing? Yes or no? If the answer is yes, great. You can refinance. If the answer is no, then you have to be be prepared that you're going to have to flip this property. You're not going to keep this property and rent it out and make an income. Okay, so be prepared for that. I hope you guys got some value from this video here. Hope you guys got some value. If you guys have any questions, reach out to me. Daniel Char, Metal Mortgage, happy to help you guys. I do flips all the time, so this is like second nature. If you guys have any questions about your deals, just let me know. Happy to help you guys. Take care.